Welcome to our in-depth analysis of PTL Limited, a stock that has recently captured market attention with its volatile upward movement. On the last trading day, PTL closed at 0.282, showing signs of strong momentum, but also raising questions about sustainability. In this video, we'll break down the technicals, volume trends, moving averages, and key indicators to help you understand whether PTL's rally is the start of a new trend or a potential trap. Let's begin by setting the stage with a general overview and the latest price action. PTL's risk profile is a crucial starting point. The stock's beta stands at 0.551, which means it's less volatile than the broader market. The risk-reward ratio of 1.27 suggests that, on a risk-adjusted basis, PTL offers attractive potential returns. Notably, the 52-week position is at 89.9%, indicating PTL is trading near its yearly highs. While this can be a sign of strength, it also means much of the upside may already be priced in. The technical score of 62.5 reflects moderate technical strength, but the ADX at 18.95 signals a weak underlying trend. Let's see how these factors combine for the current outlook. Diving deeper into momentum, the Arun-Up indicator is at a perfect 100, signaling strong short-term upward momentum. However, the Williams R at -56 places PTL in neutral territory, neither overbought nor oversold. The weak ADX reading means that, despite the impressive short-term gains, the overall trend strength is lacking. This combination suggests that while buyers are currently in control, the sustainability of this rally is uncertain. Investors should remain cautiously optimistic and monitor for any signs of trend reversal. One of the most striking aspects of PTL's recent trading is the divergence between price and volume. The last price of 0.282 is substantially below the VWAP of 0.736, a deviation of -61.67%. This means that recent buyers are, on average, sitting at a loss. Unbalanced volume, OBV, shows accumulation, but the ADOSC indicator points to distribution, suggesting sellers are active despite high volume. Volume acceleration and a 1,275.76% growth rate highlight explosive trading activity, but the lack of price follow-through raises red flags about the sustainability of these moves. Let's break down the concept of a volume trap. In PTL's case, despite record-high trading volumes, the price hasn't kept pace. This often happens when large volumes are driven by sellers exiting positions, not genuine buying interest. The high volume ratio 20 of 17.29 and explosive volume growth rate suggest intense activity, but the negative ADOSC warns that much of this volume may be distribution. For traders, this is a cautionary sign. High volume alone does not guarantee sustainable price gains, especially when price lags behind volume. PTL's moving averages paint a bullish short-term picture. The 5, 10, and 20-day SMAs are all below the current price, indicating upward momentum. More importantly, the EMAs, especially the EMA 5, EMA 10, and EMA 20, are not only above their respective SMAs but also rising, confirming strengthening momentum. Advanced indicators like TEMA 10 and DEMA 14 further support the bullish case. The crossover of MAMA above FAMA is a classic sign of an emerging uptrend, giving bulls more confidence in the current rally. While short-term moving averages are bullish, the long-term SMA 200 remains well above the current price at 0.792. This reflects a prior downtrend that PTL is still working to overcome. The gap between the current price and the 200-day average suggests that, despite recent gains, the stock has not yet fully reversed its longer-term bearish trend. Investors should watch for further upward movement and a potential test of the SMA 200 as a key milestone for a true trend reversal. Momentum indicators for PTL are sending mixed signals. The MACD is positive, with a histogram reading of 0.0094, indicating improving momentum. However, both the RSI 14 at 74.46 and stock RSIK at 100 are deep in overbought territory, suggesting the rally may be overextended. The CCI 20 at 468.05 further confirms this overbought status. While momentum is strong, these readings warn that a pullback or consolidation could be on the horizon as the stock digests recent gains. Looking at trend indicators, the ADX remains weak at 18.95, but the plus DI at 59.26 is far above the minus DI at 6.98, showing buyers are still in control. Volatility is moderate, with ATR 14 at 0.038 and an ATR 14 at 13.52. Hidden signals like the MAMA FAMA crossover suggest a possible trend change, but the TRIX 10 at -0.197 indicates some lingering bearish momentum. The EOM reading is minimal, showing little price movement efficiency. All these factors point to a market that is strong in the short term, but still faces underlying uncertainties. Linear regression analysis reveals that PTL's recent price action is highly unpredictable. The Lin Reg slope is nearly flat at minus 0.0001, and the Lin Reg R2 is just 0.0039, meaning the linear model explains very little of the price movement. The current price of 0.282 is significantly above the Lin Reg predicted value of 0.18, with a deviation of 0.1, or 56.67%. This suggests the stock is trading well above its statistical mean, raising the risk of a mean reversion or pullback in the near future. The upcoming trading session, PTL is expected to open with upward momentum. The last close at 0.282, combined with a pivot point at 0.328, sets the stage for potential gains. The previous session's 51.53% daily return and massive volume of nearly 583 million shares indicate strong buying interest. However, overbought RSI and stochastic readings suggest that gains may be limited. The likely opening range is between 0.27 and 0.29, with a possible gap up if momentum persists. Early morning volume patterns will be crucial for confirming the day's direction. TL's key price levels are critical for traders. The immediate resistance is the pivot point at 0.328, which is 16.31% above the current price. The main resistance, resistance 1, sits at 0.404, a full 43.26% higher. On the downside, support 1 at 0.206 is 26.95% below, and the PSAR at 0.151 provides longer-term support. The wide gap between support and resistance means PTL could see volatile swings. Currently, trading below the pivot point suggests a short-term bearish bias, but a break above could trigger further gains. Intraday, PTL is likely to test the 0.270290 range, with the potential for sharp moves if resistance or support levels are breached. If the stock fails at resistance, a decline toward 0.206 support could follow. The wide distance between key levels means traders should be prepared for fast, volatile swings throughout the session. Monitoring price action near these levels will be essential for managing risk and identifying breakout or reversal opportunities. Using the ATR 14 of 0.038, we can project PTL's potential intraday high and low. Adding ATR to the last close gives a high of 0.32, while subtracting it gives a low of 0.244. These levels create an expected trading range for the day. Resistance 1 at 0.404 is above this range, while support 1 at 0.206 is below. The volatility breakout reading of 5.18 suggests the potential for range expansion, so traders should watch for price action near 0.32 and 0.244 as possible reversal or breakout points. First possible scenario for PTL is a bullish continuation. If the stock breaks above resistance 1 at 0.404 with strong volume, it could target the 0.5 level or higher. This move would be supported by positive MACD momentum and the MAMA FAMA crossover, both of which indicate a strengthening uptrend. However, confirmation from volume is essential. Without it, the breakout may not be sustainable. Traders should look for a decisive move above resistance before committing to a bullish outlook. Second scenario is consolidation. Given the overbought indicators and weak ADX, PTL may enter a range-bound phase between 0.25 and 0.35. This would allow momentum to reset and the stock to build a new base before making its next move. Consolidation is often a healthy pause after a strong rally, giving both buyers and sellers time to reassess. Watch for decreasing volume and sideways price action as signs that consolidation is underway. Third scenario is a bearish reversal. If PTL fails to break above the pivot point at 0.328 or faces heavy selling at resistance, a decline toward support 1 at 0.206 could follow. This would be especially likely if volume distribution continues and overbought conditions trigger profit-taking. In this case, the wide gap between support and resistance could lead to sharp, rapid declines. Traders should be alert for signs of reversal, such as failed breakouts and increasing selling pressure. TL's technical score of 62.5 and risk-reward ratio of 1.27 slightly favor the bullish scenario, but the presence of overbought indicators increases the probability of consolidation or a pullback. The favorable beta of 0.551 means the stock is less volatile than the market, which can be attractive for risk-averse traders. However, the high 52-week position suggests limited upside, so risk management is crucial. Always weigh the potential reward against the risks before making a move. Volume analysis remains a double-edged sword for PTL. While the surge in trading activity could signal growing interest, the fact that price lags behind VWAP and ADOSC points to distribution means caution is warranted. High volume without price gains often precedes reversals or extended consolidations. Traders should look for confirmation from both price and volume before interpreting the surge as a bullish sign. Recap: the most important levels for PTL are resistance 1 at 0.404, pivot point at 0.328, and support 1 at 0.206. The current price is below the pivot point, suggesting a short-term bearish bias unless a breakout occurs. The wide range between support and resistance means volatility is likely to remain high. Keep these levels in mind as you monitor PTL's price action in the coming sessions. Conclusion: PTL Limited presents a technically complex picture. The stock has strong recent momentum and a surge in volume, but conflicting signals from technical indicators and volume analysis suggest caution. Overbought conditions and the risk of a volume trap mean that traders should be vigilant and wait for confirmation before making bold moves. Watch for a breakout above the pivot point for bullish continuation, or a failure at this level for a potential reversal towards support. As always, manage your risk and stay informed.